So it has been slightly more than a week since I've uploaded my last video, so I hope you guys didn't miss me too much. But I think for Alibaba, the last 5 to 8 days hasn't been very exciting. It just goes up and down, and it's essentially trading around this band. So I think from the previous update, it was really this huge news or huge development around this entire splitting up of Alibaba Group. So it's gonna split up into 6 different business units, with each of them having their own CEO managing the different businesses, so that there is a certain level of accountability. So I think in one of the previous video on my own channel, I've made a very short description. It was like a walking video, with a very shocking face. It's only like 9 minutes long, essentially speaking about the news update. And for hardcore viewers, you guys probably would know that I actually run a side channel called the Backholder Pod. So for those of you who don't know yet, head over to just click on the subscribe button if you want to listen to more of my shenanigans. But anyway, we did cover about this entire Alibaba splitting up in a much more extended version. It's more than 26 minutes long. It's basically just the three of them just grilling me and asking me questions. So for those of you who haven't checked that video out, I highly recommend you to do so, because I think from that video, it's a lot more nuance and there is a lot more details compared to the very short one that I did right after the announcement. So from that video specifically, I've actually screenshotted multiple comments, and basically to try to answer some of the common Q&A around Alibaba splitting up, what's gonna mean to shareholders, what can you expect, etc, etc. Because sometimes I might forget that people actually come to YouTube to seek financial advice and what to do with X stock, Y stock and whatnot. No, I'm just joking. So please do not come to online communities or online platforms to seek air quotes financial advice. You don't even know me in real life, so why would you even trust me? So just look at the facts, look at the data, make the decision on your own. But I would just like to put a disclaimer out. I don't work for Alibaba's IR team. I'm not part of their investor relation. So whatever that I'm going to share in this video is purely from my own understanding and just probably normal market practice or normal industry practice. So let me just flash out some of the screenshot that I actually kind of took. So these 2 comments, initially, it's similar. Not sure what investors that hold 9988 or BABA shares, how will they dispose our shares after they split into the 6 business units? So as a Baba shareholder, what businesses do I own now? Am I getting all 6, or am I left with the e-commerce only? If I'm getting less business, why is the price up? So I think just to really briefly kind of give a top-down view and a very macro view of what's going to happen. Now, I just wanted to make sure that you do not miss out on this sweet deal. So I'm excited to tell you about MooMoo, which is today's sponsor. So MooMoo is a powerful investing app that offers unique features like institutional tracking. So with this feature, you can actually track the investing history of big investing legends like Warren Buffett and gain valuable insights into their investment strategies. MooMoo is currently offering an amazing welcome rewards program that you don't want to miss out on. So if you actually sign up before May the 31st, 2023, you could potentially receive welcome rewards worth up to $208. So if you deposit more than $100, you'll receive $2 every day for 10 days straight, and that's a 20% ROI. If you deposit more than $2,000 and execute 2-buy trade, you'll receive a Cook shares worth $80. So if you hit the highest tier of depositing more than $10,000 and execute 7-buy trades, you'll receive $108 worth of cash rewards. And if you sign up today, you'll also get access to lifetime commission-free trading for the US markets. So this is an incredible opportunity for all my Southeast Asian viewers. And for my US and Australian viewers, MooMoo is also running aggressive reward campaigns, giving out free stocks as well. Just make sure you click on the correct link down below. So what are you waiting for? Stop procrastinating and start investing with MooMoo today. Thank you MooMoo for sponsoring this video. Yes, as of today, as of now, you as an Alibaba shareholder, whether you hold 9988 or whether you hold BABA, you have 100% stake in all 6 businesses. So what they're essentially saying is, long story short, they're going to split up into the 6 business units. And technically speaking, if you're to follow their financials pretty closely, according to how they report their financials, they are already operating within these 6 business categories. You can just look through, I think within the last 2 years, any of the previous 8 quarters report, you can see there is this breakup. So post the breakup announcement, the individual business units are going to have individual CEOs that are accountable for the performances of the underlying business that they control. So I hope I get that message across. Currently, as an Alibaba shareholder, you own all 6. So what does it mean? How will they dispose your share? What is going to mean in the splitting up into the 6 business units? All I can say now is that they have intentions, or they did allude to the fact that, hey, the different business subunits might go IPO. They might get equity financing in the public markets in future. But for now, there is no concrete plans yet. So for you as an Alibaba shareholder, you own everything. So some of you might bounce back and ask me, hey Chikeng, so what's going to happen to my Alibaba share in future? If let's say Cainiao or AliCloud wishes to IPO. So the short answer to that question is, it depends. So what does it depend on? It depends on the terms of what they're going to do with the IPO. So I think the easiest way to really understand this is just treat it as there are 6 different business units currently under the Alibaba Group Holdings itself. In future, if let's say AliCloud wishes to go IPO, it's the same thing. Alibaba currently owns 100% of AliCloud. They have to give up certain rights or certain percentage of the market float in order for the public markets to trade them. So whether is it 30%, 40%, 50%, I don't know. So it really depends on the strategic interest and the strategic positioning that Alibaba wishes to take on these 6 different business units. So for one, the e-commerce business, which is Taobao and Tmall, they did say that it's going to retain control. So 100% will still be by the Alibaba shareholder. But in future, let's say AliCloud, they don't wish to retain control anymore. They can even let out more than 50% of the position, maybe 60, 70, 80%. Who knows? However, if they do think that there's a strategic interest and they wish to keep more shares, then sure, they can maybe even let out 20% or 30% of the float. And in exchange for letting out this float, they're going to get the cash. So they sell this 20-30% to the market. They have to get back the cash, right? If not, what are they going to do? They're not going to give out shares for free. So in this instance, how you're going to benefit as an Alibaba shareholder is, for example, let's say they IPO AliCloud and then they give out 30% of the float. So in exchange of that 30%, depending on what the IPO price is, you get that X percentage of cash. It goes onto Alibaba's balance sheet. So Alibaba Group, you as an investor, how you're going to benefit is this cash infusion will sit on the balance sheet. What the management team want to do, whether they give out in terms of special dividend, whether they give out cash dividend, whether they use the money to engage in several other projects, it really depends on the management team. So you as a shareholder, you don't have the rights to say it, but technically and theoretically speaking, you did benefit from this IPO because of this cash infusion. The second way is they actually give out the shares to common shareholders. For some of you who might know, specifically Tencent shareholders, they do have positions in Meituan, they do have positions in JD. But even though those are not strategic interests, meaning they own like around 20% of Meituan, so what they did instead was to give out the shares to shareholders. They don't want to make the value judgment, or they don't want to make the claim of what they're going to do with the money. So instead, they're not going to sell it, they just give it out as special dividends. The exact shares itself. So in future, Alibaba might do the same thing as well. Maybe they don't want to take the cash, and let's say they IPO the AliCloud business. Whether you want to hold AliCloud, you want to sell AliCloud, that's up to you. I'm not going to make the decision for you. So these are the two main ways that I can see how they're going to do it. But if you're to really study Alibaba's business strategically, it does seem like they still want to retain control in most of these business arms, other than digital media, because I'm not really a fan of that business. But for AliCloud, for international commerce, for local consumer services, etc., I would presume that they still want to retain a majority control. By majority, probably 40, 50, 60%. So for those of you who actually tuned into the conference call, you guys will get a sense that, hey, the management team of Alibaba was really non-committal. They just say that, hey, they might do this, they might do that, they might go IPO, they might not, they might retain full control, they might not, and stuff like that. So the main idea on why they didn't want to commit is that by giving you a timeline, investors will be expecting something. And of course, as you know, if there's a difference between expectations and reality, then the share price will start being volatile and people trade up and down based off news again. But essentially speaking, in order for you to want to IPO in a climate, you would probably want to IPO at a high price. Considering now that the economy is bad, the stock market is up, down, left, right, they're not moving anywhere, it's staying up. One day, good news, and then the next day, bad news become good news and stuff like that. So in this specific investing climate, why would you want to go IPO? Even if you have to go IPO, the subscription rate and investors are probably not excited. And when the market is not exciting, the IPO price naturally comes down. So if you do really compare back then, I think when Ant wanted to go IPO in 2020, Ant's valuation was at like what, $300 billion. And then now the recent adjustment downwards, it's more than 50% haircut. I think it's like 150 billion. So from that perspective, assuming that you sell the same X amount of shares at $300 billion versus 100 billion, that's a 66% differences. And that 66% is all accrual to Alibaba shareholders, by the way, because if I sell a part of my business, I'm going to get a cash infusion. So of course, if the management team is effective, I want to sell it out as high as possible. But given this current climate, if let's say Daniel say, oh, we're going to IPO by end of 2023 or into 2024, what if this entire recession, doomsday prediction, this investing market goes into a loss 2 years or something out into 2025? Are they forced to IPO in a bad environment, in an environment where investors are not excited? I hope not. So from that perspective, they didn't want to commit to a timeline, but they just floated the potential and floated the possibility that, hey, we might allow for different business units to kind of flourish, and if they want to indulge in certain kind of financing in the public markets, we're not going to stop them. So from that perspective, it then allows investors to kind of manage their expectation. So that's just generally what it means, and what's going to happen after they split up the 6 business units. Just understand that business as per normal, just that now there is someone that we can hold them accountable for their individual underperformance or overperformance in this case. So I hope I kind of answered that question. Now moving on, I think this is similarly what Yuva has to say. So he said that I own a lot of 9988. My concern with this split is how many IPO or realization of value from the different units get distributed to the Alibaba shareholders. There's possibility of dilution without compensation. Say Alibaba holds 51% and the remaining 49% is just IPO'd, without those shares being handed over to us. That's basically dilution or robbing us of those businesses. I would like to correct this. Not really. When they IPO the remaining 49%, they get a cash infusion. And the cash infusion goes into the Alibaba Group Holdings balance sheet. So unless, I mean, Alibaba has not a very good track record in terms of cash management, because now it still has a huge ton of cash on their balance sheet. But of course, there can be a special cash dividend. They can invest this cash to somewhere else. In theory, in the theoretical space, you actually the value is actually unlocked and it's accrual to shareholder, but you just don't see it in your bank account because the money doesn't come into your pocket. But net, so unless they start giving out huge amount of share-based compensation and just start printing shares, it's not necessarily called dilution. I think dilution is not really a very accurate representation. So at an IPO, new shares are sold for cash, generally at somewhat inflated prices. You get to pick when you IPO and sell into hype. I'd expect currently loss-making divisions would most likely to benefit from additional capital. So it's not like we'll get nothing. So those divisions get a bunch of or crash. Obviously, could still destroy value if they undersell themselves at the IPO, but really just depends on price. So the assumption here is that massive dilution doesn't happen at IPO point, diluting out Alibaba's own shareholders. Too many unknowns, and I do agree. So you know what else is not an unknown? Smashing the like button. So if you watched the video until now, I still don't know why you haven't smashed the like button yet. And I do have more than, at least I think I have around 10 screenshots, and I'm only on the 3rd one. So I spent quite a considerable amount of time trying to discuss about what's going to happen and what's the potential structure. So like I said, the short answer to many of your questions is, it depends. It depends on the terms of the IPO, it depends on the structure, and it depends on how the company wishes to execute it moving forward. So this is part 1 of me trying to answer many of your questions around what's going to happen after this Alibaba split up. And of course, I know many of you who clicked into this video, you guys just want to know the answer. What am I supposed to do with the shares, especially for existing Alibaba shareholders? Am I supposed to sell it? Is there any realizable value? What am I going to do? Am I going to hold and stuff like that? I'd just like to say it's not financial advice, but if you clicked into a video knowing that I'm a huge Alibaba bull, and then now it's up like what? It's not even up. I'm still down net on my position because my cost is much higher than current prices. What do you think I'm going to tell you? To sell it out at this current prices? Not really. It's not really a fundamental shift. This is just a kind of a finance structuring, and they're just playing around with numbers and trying to realize values since the market is not really effective in trying to price their valuation. But I think this comment from Andy really resonates quite well with me. So I'm going to leave you with this parting comment. So the funny thing is this, nobody knows the detail of this breakup. What will happen to existing shares, which are going to IPO and at what price and terms. With this much uncertainty comes the chicken and egg theory. Price pump means it's positive news, or pump and dump scheme. As what Bunty pointed out, for a company that's already listed to IPO sub-businesses, I doubt there's the usual excitement of an IPO to command high valuation price. And if it's priced on the lower end, it's going to be dilution for existing shareholders instead. Remember, when companies IPO, timing is very important. Usually, they rather delay IPO than to push through during bad times. And many would agree that current market conditions is challenging and not really favorable for such moves. Last but not least, in investment, I never believed in buying on news. Most of the time, it never ends well. So I think there are a few parts to this comment. I think I'll try to break it down piece by piece. So the first part, I think I've spent an extended amount of time in the earlier part of this video. Which of the businesses are going to IPO, at what price and at what terms, nobody knows. So that's just keep that at the back of your mind. I think the bigger issue on why there is a air quotes pump in price really is because at that previous current valuation when Alibaba was trading at $80+, everybody knew, every single mother son on earth knew that Alibaba was undervalued, but nobody knew how to unlock the value, unlock shareholders' value. So if you're able to break the businesses up and you allow the market to effectively price them accordingly, then it's definitely net if you aggregate all the prices or all the valuations together, then yeah, we are probably expecting Alibaba to trade above 80. So since everybody knew of that fact, when there is this potential breakup, then boom, the price immediately skyrocket up to more than $90 to $100. So I think that was the greater context on why there was this price pump. So is it a price, whether is it a pump and dump or whatnot, I don't necessarily think so. It's just trying to realize the value. And I mean, come on. For those of you who really know how to do some simple math and some quantitative calculations, if you take all the politics noise around the stock itself away and just look at the business itself, the amount of free cash flow they generate, the free cash flow yield, the price to earnings and stuff like that, we all know that it's undervalued. So this realization of 10%, is it mind-blowing? Personally, as an Alibaba shareholder, I don't think so. But yes, I do agree that there are many people trading around the news, which is why there's this great amount of volatility. But I think I wanted to kind of answer that question on, hey, if there is no usual excitement of an IPO to command high valuation, is it net accrual? I think in the short term, if it's not a high valuation, then it's no. Because like I said, right, the cash infusion to the balance sheet, you don't necessarily benefit if they IPO at a low valuation. But that said, you kind of benefit in the long run if the market is able to price them effectively. So backs the question again on what's your assumption. Do you think the ability for the public markets to price the different businesses, are they effective or not? If you think they're effective, and if let's say they IPO maybe a small float, 10, 20, 30%, then Alibaba actually still holds a majority stake, which is like 60-70%. So by the forces of the public markets using demand supply and everybody reflecting their own view, then yes, the initial position or the main bulk of the position, if Alibaba still holds them, it's going to be priced more effectively compared to now when you lump everything together and then you throw in Chairman C and then you throw in US, China politics and all the yada yada and all the noises. Then yeah, there's a conglomerate discount, there's a politics discount, there's a China discount, and then the discount finish, the share price is like what, $70-$80. At the lows, it was at like $60. And everybody knew that it was undervalued, but nobody dared to touch it. So by breaking it up, it just gives a more cleaner look for everybody to kind of price it effectively. So I think that was the discussion. And I think last but not least, I do agree. In investment, I don't think that people should buy around the news. You should buy around the fundamentals, and you still think that Alibaba is a good business after all, because let's not forget you're buying into businesses. Then I don't necessarily think that it's overvalued at current valuations anyway. So you make your own decision. With that, I'll see you in the next video. But more importantly, I will finally see you on the moon. Goodbye.